Okay, today is December 29th. We're going to do a complete walkthrough analysis on this pound dollar 30-minute time frame trade. So this is pound futures is what we're looking at. We always start with pound futures. Now, all of these updates were posted inside of the Slack channel, and including last night's uh, video where I ended the review after there was a reversal that we traded yesterday, and I made a video based on some questions that were in the Facebook group. So we were looking at a template. You have access, if you're in the 10x FX coaching course, you have access to that template that if you watch the video, you can see that I was using Bollinger Bands to confirm the reversal and this evening star pattern right here where I'm moving my cursor. So that's the and I'm going to say this all the time, that that's not the starting point using the template or the Bollinger Bands. I don't want you to skip ahead. So the Bollinger Bands and that template, that MT4 template, is an additional form of confirmation. The initial starting point always begins with the bar chart and then looking for selling climaxes or buying climaxes and the stopping action and then the automatic reaction that gives us an opportunity to calculate and to analyze the phases of accumulation or distribution or reaccumulation or redistribution. So everything that you're learning in Module 1 inside of the 10x FX course, this is exactly what we did today to find this trade. Now, I've been saying for the last maybe week and a half or so, since just prior to Christmas, that we're trading during holiday season. And it could mean that price is going to go sideways, it's going to go flat, there's going to be less participation. It also means that we could see volatility spikes or some reactions. It doesn't guarantee that things are going to go sideways. We have to wait and watch, but we have to have the expectation and the understanding that we might not get a trade each day. It just, you have to be prepared for that. So don't force anything is what I'm getting at. Make sure that when you're looking at a trade, it's a valid, legitimate trade opportunity, and volume levels and participation have come back into the markets. That's exactly what we see here. You can see a lot of activity. Just by simply looking at the volume indicator, you can see that there's a lot more activity. Obviously, this is the Asian overnight market where it gets pretty slow. We would expect this kind of behavior anyway. But you can see there's more activity today than there was yesterday. That's what I'm getting at. You can clearly see just by looking at these indicators here that today there was more participation. Now, it could be that today and tomorrow might be active, and then we get, New Year's Eve, and then we're done. Be very careful as we get closer and closer to the end of the week. Things might slow down. Or people might be trading right into the very last few hours because they maybe took the time off during Christmas. Every day, every year is always going to be a little bit different. But the only way to measure this and to calculate this is to look at volume levels and to measure and to count the waves into critical levels of support and resistance. So again, I left off with one video. Now, members only in the 10X got updates, but when I'm posting some of these videos, these free videos in the free Facebook group or on the YouTube channel, obviously I'm not going to sit here and post every single hour, every 30 minutes, the updates. So please take that into consideration for those who are watching this video. If we decide to share it in the Facebook group, be aware that you're going to get obviously a lot more updates and through the Slack channel and the opportunity to find these trades. The analysis that I do when I share it for free in the Facebook group or on the YouTube channel, it's at the end. My work primarily and my responsibility is, and my commitment is to my coaching clients. It's always going to be there first. Again, I don't mean any disrespect for those who are trying to learn for free, but you're going to get limited information if you're learning for free on the YouTube channel, and it's going to be delayed for the most part. So I want you to be careful. I want you to be mindful of that fact that it may be delayed, the information that you're looking at. And I don't want you to chase a trade, and I don't want you to find a trade, that's, maybe you've missed the entry and it ends up experiencing some kind of significant retracement and you get stopped out. So let's go through the review. What you're looking at here, again, is exactly what you learn in Module 1 in the 10X course. We're analyzing the phases of this consolidation. And in fact, it turned out to be a phase of reaccumulation which means that there have already been prior signals and opportunities to get in at the lows of accumulation. Let me show you what I mean. So this is the daily time frame. You see me going back to this chart all of the time. This is the pound dollar. This is a pound dollar daily time frame. You see me going back to this chart. We talk about it all the time. This was the 30th of November this year. And this was a pretty significant day. You can see by the body of that particular candle and the size of the wicks. And not only that, but the range from the high to the low, that was a pretty significant day. And from that point on, things were pretty much going sideways. However, last week we were able to trade this bounce off of support, and we were able to trade continuation breakout trades to the upside. Now, I have videos discussing that continuation breakout trade, how to use it, and how we were able to profit from it. It also gave us some opportunities to trade continuation breakout trades on the pound yen. And when we use that strategy on the pound yen, the continuation breakout trade, it pays 250 pips. The first target is actually 150, and then the second target is 250 pips. So there's a lot of money to be made when you can identify these breakouts. Now, this is very different than what we see on the euro dollar up until today. The euro dollar was moving more or less sideways for about a month. The pound dollar was not. And the pound dollar clearly bounced off of this trend line. Let me go ahead and tighten this up. This goes all the way back to May and June of this year. You can see how it starts right up here and then works its way down here, bounced off of this support level, gave us a good opportunity to trade the breakouts. Now, the final confirmation from me, and to gather my thoughts as far as price expectation and predicting where price is going to go, was on the point and figure. So go back to the point and figure inside of the membership course, and you can see how we were using point and figure to analyze this phase and this area of accumulation. We didn't know for sure if it was going to be accumulation or if it was going to move up and then stall and then pull back down and come back down. We don't know, but we continue to track the efforts and the results that we're getting each day to confirm that in fact this is likely, and we have a point and figure count that is much further and breaks out of this trend line, of this channel, this channel and this downtrend line, and then possibly over the course of the next few weeks, we could see price move up and then maybe come back, pull back, test. Sometimes they bounce off of the top side of this downtrend line. Maybe it could be a bounce off of this little level of resistance right here at some point in the future. So we would expect it to see price maybe move up and then pull back and then bounce and then continue its way back up if the point and figure count is accurate. Now, with point and figure, I always say this, especially if you go inside of the membership course, the 10x membership course, and you watch the point and figure, we always have a first target, which is a minimum count, and then we have a conservative count, and then we have the overall count, which incorporates all of the data that we can see on the larger time frames. So we're going to have two price targets, and we can continue to track it each day, again, measuring the results that we're getting and the activity to make sure that everything remains constant. So again, down here, throughout November and December, prior to the breakout last week, we had a range of accumulation. So what we see today on the 30-minute time frame is another range of accumulation, and which is reaccumulation. So it continues, this trend continues higher. So let's go back to the 30-minute and I'll continue analyzing this chart with you. So we have, again, yesterday's trading range, which created a high and a low here on a 30-minute chart. So if I'm going to day trade this, this is a perfect opportunity for me to day trade this. Again, we don't always know until everything starts to really set up and we get tests. And again, we're measuring the activity and the results that we're getting. We're looking for specific candles that might indicate a significant reversal. We're looking at and analyzing the waves and volume, the supply and demand signature. And when you see me here mark off these sections here, phase A, phase B, phase C, this is exactly what we're doing. And this is Wyckoff price structure. This is the price movement mechanism. If we're going to see a big break like we do today, relative to this time frame, we're going to see more activity at the lows as opposed to more activity at the highs. Makes sense, right? Smart money, you want to think like a smart money trader, so you want to get the best price if you expect price to go higher, which means you're going to acquire more at the lows. This is reaccumulation in the overall big picture of the daily time frame that we see it breaking out and moving, the previous chart that I just showed you. So again, we're going to see more volume levels stepping in at the lows. Now, prior to the London Open, you can see that I marked off the London Open first 30-minute bar right here. And what we see is volume levels printing 2,317 contracts. I'm sorry, 2,517 contracts. That was pretty significant considering the activity during the overnight session. And we want to have something as a point of reference. So you can see over here, yesterday, we had this down price swing that measures 2,659 contracts, didn't approach the low or take out the low. And here again, the first 30-minute bar, more activity in just the first 30-minute bar by itself, 2,517 contracts in that first 30-minute bar. A lot of activity, but no reward, meaning that price still did not close below that support low. Now, it doesn't mean that we're not going to see another attempt, but on the second attempt, let me go ahead and open this up one click so you can see what we're talking about. On this second attempt, it did dip down through that support, but on that 30-minute bar, it reversed and came right back up and closed positive. So you can see that bullish histogram bar here on the volume levels. So this is leading into that spring and then the testing action. Sometimes the testing action will remain above the support level and sometimes it does not, but it did not close and take out the actual low that we saw here at the London Open. It was a clear reversal. Now, there are times when I talk about trading that Good Morning London breakout strategy. There are certain conditions in certain environments when I would avoid it altogether. This would be that type of trading activity. And I warned everybody yesterday, members only in the 10x FX program, that we might just skip the HL30s and not trade them, even though they may set up. And we might just leave alone the Good Morning London breakout strategy, because again, it could create choppy price action. So you can see here that it printed a head fake. It went to the downside and then reversed and came back up if you were to try to trade that Good Morning London strategy. So you need to listen to the updates with the 10x FX Slack channel. You're going to get those. The updates that I give you, we're looking at reversals at support and reaccumulation. We were expecting the possibility of a breakout if we saw more volume levels. There was also the possibility that it could have just printed a strong move to the downside that would have been confirmed and the whole thing would have collapsed and we would have sold it. But that's not what we get. We do not get any indications here that this is a selling opportunity. Again, the first 30-minute bar at the London Open, pretty significant. We see volume levels stepping back in. The next 30-minute bar, it does dip down to the downside, but that's not an entry. That's not confirmed. I would be waiting for a close completed candle with more volume stepping in, and then maybe a pullback where it held below support and then another reversal. That might have given us an opportunity to trade that, but that's not what we see. We see again the first 30-minute bar, it holds there, more activity, it stays above support. The next one dips down, the next bar dips down through support, but reverses and goes right back up. So if we're waiting for this candle to close, we would have never gone short. And then we see volume stepping back in. Now this is sort of that change in character. But I'm still looking for more, right? We see another test where it starts to close below 3,300 contracts within this this price swing here, these two bars, which is 1 hour. This is a 30-minute time frame. And yet, again, with more volume, more participation, yet we still do not see price taking out significantly the lows and accelerating to the downside. This is showing this exhaustion or accumulation. They're acquiring more here before this reversal. And then again, waiting for another candle. We see it reversing, going right back up inside a consolidation. And then we get more volume here. Now, another test, which is 1,700 contracts. That takes a little while. Remember, this is something that I say all of the time. The cause that's built as this accumulation phase is developing, there's a reason for it to take this much time. There's a lot of people fighting this, and the people that are fighting it are the retail traders who are inexperienced. What they're doing is they're seeing price take out the lows, and very often they're shorting it. And then if they get stopped out, or if they see it reverse and go back up, when they see it come back down again, if they miss the opportunity, they're jumping back in, or they're adding more to the position, or they're holding too long, and then it reverses and comes right back down. Smart money's not trading it like this. You know that. You want to trade like a smart money trader. Again, let me go back and tighten up the trading, the whole setup. If you are a smart money trader and you're anticipating a possible continuance to the upside based on the daily time frame, which would be more bullish activity, you're going to acquire at a better price, which is at the lows. And that's why we see so much struggle here with the retail, inexperienced traders fighting the behavior. But smart money is not behaving that way. They're just putting on more to the opportunity. And then here we get that strong in phase, after phase C in the spring, we see this strong bullish candle or bar. And it is, for the most part, an unusual bar based on the prior bars that we see here. It's an unusually large range bar. Volume levels are still okay. This is exactly what we want to see. And we get one final test right here. So these are the two tests that we get that finally give us our confirmation. Now our entry, which I mentioned in the Slack channel, was 1.3434. That was my entry. Now the targets. Obviously, when we break out and above this resistance point, sometimes we see price come back down, test the level of resistance, and bounce and continue. So we have a second target. But the first target, initially, if I'm going to get inside of phase C before it actually breaks out above resistance, this is going to help me minimize my stop. I know where my stop loss is placed, but my targets are going to be likely a psychological level inside of a range like this. This is relatively new. As far as the breakout relative to this time frame. I use the word relative to this time frame because again, I don't know if perhaps the holiday season is going to have some kind of an impact and it's going to be limited, or is this going to continue for the next couple of days, Wednesday and Thursday, going into, let's say, Friday, New Year's Eve, and it's just going to keep powering higher. It is an opportunity and it is a possibility. So again, we're going to continue to measure this and to analyze the results that we're getting along with counting the waves and volume and the participation to make sure that we're holding on to a valid trade. So we're going to scale out of this position. The first target is a psychological level. Now you hear me say this all the time. What are psychological levels? It's the 00, the 20, the 50, the 80, and then again it repeats the 00, the 50, the 20, the 50, the 80. And it's the same thing on the way back down. So here, the psychological level, the first target was 80 with an entry of 34. That's a decent trade. And then if it pulls back now, excuse me, the high, only went as high as 98. The next level would have been the 00, which is right up here, and it fell just 2 pips short of that. So we're going to scale out. We don't want to give back any profits. You should have already locked in profits if you are a coaching client in the 10x FX program. So this is a great trade. And the same behavior occurred in the euro dollar. I'm going to show you that in another video. I want to split these up so that this isn't a long going, long video here. I want you to see these in bite-sized pieces of information so that it makes sense depending on which currency pair you were trading. So again, these updates are all posted inside of the Slack channel. The analysis and the breakdown of this phase, if you want to download this, the phase analysis of this reaccumulation so that you can confirm and take a look at it for your own records. That is in the Slack channel. You can download that. I am going to post this at the end of the day inside of the membership area under the live coaching call replays, and we'll review this again, and then I'll give you the screenshot of the way I was counting the waves here, and then the phase analysis so that you can participate and find these tests, these pullbacks that confirm that we're trading it in the right direction. When we see tests, it does not necessarily mean it's going to break down to the downside. That's not what we're looking for. And the whole thing sets up all the way back here with the daily time frame and the point and figure daily time frame count that all lines up with what I see that's taking place here on this breakout on the 30-minute time frame. So in the next video, I'll do a full analysis just like this one, excuse me, on the euro.